Hello and welcome back to Stock Market Weekly. I'm your host, Evan Medeiros. This is the show where we break down the notable moves across financial markets in 20 minutes or less. We're going to fly through today. It's a beautiful day out there. I'm going to try and get out of the office early today, so a quicker slide deck. We're going to get right into it. Hope you're doing well out there. Let's move forward here. This video is sponsored by our friends over at Investors Business Daily. Check out the link in the description of this video. It's on screen right here. Market Surge, beautiful platform to do some market research with. Check it out. Introductory offer from the trade risk at that URL. And before we get into it, we've got a special webinar. Come hang out with me on Monday. I'm going to be talking about this new product research dashboard that I've been working on for months. And I'm going to do a live demo. I'm going to take questions. I'm going to debut it and talk all about it. So if you are a momentum trader, if you're a swing trader, a momentum trader, looking for the leadership hot stocks, join this webinar. Check out what we got in store for you. I think it's going to be good. I'm excited to talk about it, and I'm going to try not to say any other spoilers right now. Link in the description of this video and also right on screen here as well. Monday, 4 p.m. Eastern, June 30th. All right, so I can't believe this was to start off the week because it feels like months ago, but the U.S. enters the conflict over in the Middle East. We had the United States bombing Iran's nuclear site, and this was Monday's sort of welcome to the markets here as tensions escalate to kind of max level. But here is the price action of the S&P 500. That's Monday. On to Tuesday. Let's get my little drawing over here. Let's see where this is. I always forget. There it is. All right. Okay. So this is Monday's action right in here. We find a low pretty early. We get an initial little panic here. This panic actually coming in on the news of Iran retaliating against the United States, and then the market sort of just moving up and to the right. And of course, this is what oil has done. At the same time, basically, is oil selling off aggressively as Iran retaliates on the United States. Everyone's confused. Why is this happening? And then, of course, we get the ceasefire news, or the announcement of a ceasefire here of the conflict, basically signaling that maybe we've reached some conclusion, some end. We've orchestrated some deal where U.S. bombs nuclear sites, and then we can kind of claim a peace victory or mutual agreement. Again, I'm not going to wade too much more into the waters here, but what you basically need to know is markets will often do the exact opposite, right? This seems confusing to many, but price action is, telling a different story as some of these doom and gloom headlines hit the tape. Now, in terms of performance this week, it was a blockbuster week. So again, starting the week off of something which seems so dire ends up being a great week for stocks. This is something that we all learn as traders, is to follow the price action, not necessarily the news headlines. And so you can see Q's up 4%, SPY up 3.5%, and we hit all-time highs in 3 of the 4 major U.S. indices this week. Now, S&P here on the week, again, just up and to the right. Started the week off on the barely could call it panic lows, but I guess we'll call it panic lows. And then we essentially rallied throughout the week. Again, you can see this is kind of Monday's bar right in here, where we attempted to take out Friday's lows. We failed, and then we just moved up, and up. So volatility index going in the opposite direction here. So down and to the right, we've now got VIX down around 16.54, which is the approximate lows, kind of where it's been settling over these past couple of weeks, down around this fairly complacent level. United States dollar is struggling here. It's still being, kind of sold off heavy. We tried to put in some type of bottom here. We talked about it last week, where maybe this was an undercut kind of double bottom situation where we got a nice little rally, but that has proved to fail. And now we undercut here, and we have more dollar weakness. Treasury yields, 10-year Treasury yield briefly down at 4.25% on Thursday. So sinking lower, dollar sell off, rates lower. And we did get a little bit of an uptick here on Friday going into the weekend. But generally speaking here, the 3-month view of the 10-year Treasury yield is lower. And so I think we are sort of rejoicing on that. We'll talk a little bit about the market's expectation on rate cuts a little bit later in this video. Here's the sector performance this week. So again, lots of green across the board and sharply green. I mean, 5%, 4.5%, 4%, 3.5%. These are big moves up for a lot of sectors here and an already pretty heated tape, right? I mean, we were cooling off, we were going sideways, so we had some pent up energy, and we got that failed breakdown, and then we slingshot highs higher to new highs. Here's our smart trend filter indicator. So we take a pulse on this every single week, and we now have a lot more sectors kind of joining the bullish regime here. So if you recall from last week, we had a lot of stock sectors clumped in our neutral state, which was basically indicative of the sideways chop, the range bound behavior, and the let's look both ways before placing a trade, and let's figure out which way we're going to tip here. And now we can see that much more of the sectors here are tipping into the bull favor. Technology, financials, healthcare, industrials, materials, communication services, all on this list. Neutral is still consumer discretionary, energy, utilities, and real estate. And on the downside, on our bearish state here, is consumer staples, kind of standing alone by itself here in a bear daily trend. So that is our smart trend filter. If you're a TC2000 user or a TradingView user, you can find this indicator on our website and get it on your own platform. Let's keep moving here to 52-week highs and lows. You can see we're finally getting up to triple digits on the number of stocks hitting 52-week highs. Starting to make sense. We got the indices at new all-time highs. You're going to probably see more stocks hitting this 52-week high list, or at least we better if we want to see, broad-based participation in this market. If we want to have more confidence in this market, then we're going to want to see next week be a week of a series of triple digit readings here. That's what we're looking to see. So let's stay tuned for that. Percentage of stocks above a 20 SMA here in the S&P 500 starting to move back up, as we would again expect here as stocks push to new highs. Put to call ratio kind of stuck in the middle. Not too much to say about that one. Bitcoin, we've basically had that outlook of sideways consolidation. You can see we've got more of kind of a flag channel here, and here's what this potentially leads to. Excuse the 5-year-old drawings here, but you've got this nice rally up, you've got a consolidation sideways here, lower lows, lower highs. But if Bitcoin can start to 106 has been kind of my level I've been keying off of here for a good unlock, and we're hanging above it. But if we can start to break through this little downtrend line, say above 110, this pivot right here, then I would say Bitcoin is back onto the races. New highs would be expected soon. We're not there yet. Hasn't happened, but that's kind of the developing trade there that I would be paying attention to. I do have a position in Bitcoin here. Pretty much always have a position in Bitcoin, but our trending models, our Galahad trading system also has a position here because the long-term trend is up. It's been involved for quite some time. It's been hanging through the chop. That's what it'll do in a long-term trend following system. Certainly what it's supposed to do. And so we'll see if we can get some continuation here next week. You could argue that Bitcoin's been lagging a little bit with the Nasdaq 100 breaking out to new highs, Bitcoin consolidating, but these things play, kind of cat and mouse with each other, and they can catch up, to each other pretty quick when one starts to move. So that's Bitcoin. Here's the Fed funds expectation here. So there's been some new talk now of or some increased chatter now about Jerome Powell essentially being replaced. Call it President Trump inserting a shadow Fed to basically dictate what's going to be happening post Jerome Powell's term next year. But we have the September meeting. So I'm looking out not to next meeting, but this is 2 meetings from now in September. And you can see that the market is pricing in a 76% odds of a 25 basis point cut coming in September. And then I think if you go out to December, You'll get down to 2 rate cuts expected by the market this year. So this continues to be this back and forth game of Fed says they're data dependent, they're tight, they're waiting, but then you also have a lot of hostility from the administration, i.e. Trump, against Jerome Powell, and basically putting a lot of pressure, and then potentially putting in that shadow Fed to dictate things. So let's keep an eye on it. Again, there's a lot of moving parts to this. It's not just the shadow Fed, but it's also inflation expectations, the economy, jobs, and all that fun stuff, tariffs as well. So this was a chart I posted on June 4th, and I should have included the commentary here, but this was on I believe X or StockTwits or both. But this was this observation that I made on June 4th, where this is a ratio chart of semiconductors relative to the QQQ. All right, so you're basically taking a relative strength chart, essentially, right? One divided by the other, and you're looking for spots where semiconductors can lead technology when they are the leadership in the market, right? Things typically are more sustainable. There's more durable leadership. There's more kind of at least cyclical trends that are pushing the market up. And this was back on June 4th. And here's a new snapshot from this week, which I updated the chart, but here it is with SMH relative to Q, same chart, flash forward 4 weeks. And we've had a very strong market here, right? We've had a nice continuation up here in market. So this is one of the ratio charts that I think is got some telling, some predictive power, right? Not really, but it certainly forecasts a little bit of kind of more under the hood type of strength. And this is the leadership that we want to see in the stock market. So semiconductors continue to lead the market. And NVIDIA, is certainly a big piece of that, right? So NVIDIA broke out to new all-time highs this week. Here it is. Congrats to the buyers there. It's been range-bound for quite some time. And so here we go. Basically a V-shaped move here off of those lows from late April, early May. Now, to wrap up, getting close to the end here of S&P 500 levels to look at. S&P again at all-time highs. So life is good here for the bulls. And the way I sort of frame it is, as long as the SPY is over 610, then the chase is on. We're in a momentum-driven market. We're in a little bit of you got to get in and not be left behind. And I'd say that's right around 610. That is the old highs here from early 2025. So if we're above there, then you're kind of in that momentum zone. We can trend, we can have froth, we can have rotation, but that's where we want to see to keep as much strength as possible. And then for the more intermediate term, the longer term traders here, investors, right? 525, the bottom end of Monday's range, right? So right as the panic was coming in, as the Middle East got super messy, this is the level that I think is more structurally important going forward. Good place to, have those longer term stop losses or adjusting portfolio exposure based on the lows here of the week, effectively, right? In the bottom end of this range. So you kind of have, in my eyes, your upper level momentum and then your more intermediate term kind of support that you want to see us above. Those are the key levels I'd be paying attention to going forward here in the S&P 500. Next week is a big one because we have non-farm payrolls. That's the jobs report on Friday. That's a June look. So, of course, jobs is a big one in terms of econ data. And as we start to wrestle and play with those percentages of what the Fed's going to do and how many rate cuts do we get, if any, this year, well, that'll be an important report. We did have PCE out this week, this day, Friday, and that I think showed a slight increase in a slight tick up in inflation, but nothing that was out of the ballpark there for expectations. So that is what I have for this week. I'm going to leave you with this slide once again. For all you momentum swing traders, come see what I've been working on these past couple of months. Here's the link to register for the webinar. It is this Monday, June 30th, 4 p.m. Eastern, and we'll do a live demo, come with some questions, we'll have some fun, and hopefully make it educational as well. Totally free, of course. So that's what I've got. Thanks as always for tuning in. I hope you have a great weekend, good weather up here, and hope the same for you as well. We'll see you back here next week. Take care.